Well, ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the New Zealand versus US dollar. Focusing on the daily chart to begin with, what we saw over the last week and so of trading was that the price started to trade back above and below this the low of this swing area through here. The swing area defined by different swing lows through here and swing highs through here. We moved back above it, moved the price higher, came down, tested this area right through here, and as you can see, in the week before last, the market started to trade above and below those levels, so it's pushing to the downside. Now, the price is also testing the 50% retracement here and here. That is 50% is of the move up from this low right here to this high right here. 50% retracement came in at 0.60242, and the price banged against that level on a couple of different times in the recent trading before moving below it on Wednesday and extending to a new cycle low for this currency pair, lowest level going back to November. So it looked like the sellers were trying to take control and push this pair to the downside, but lo and behold, we saw the price rotate back higher on Thursday, helping by better China data, risk on sentiment after the passing of the debt ceiling, so on and so forth, higher stock prices. We started to see New Zealand versus US dollar move back to the upside and back above this swing area, which had as high of the swing area at 0.60840, but as you can see, the price has rotated back to the downside on Friday's trade and trades in between the 50% retracement at 0.6084 level, and market's still unsure of which way it wants to go, with support at that level, resistance at this level. Let's take a look at the hourly chart, see if we can make some sense from the hourly perspective with those levels in mind. So if we look at the hourly chart, 0.60242 level is our support level right here. On the top side, we had the 84 level in play for it, and we'll put a horizontal line at that level right there. And if we could look at the hourly chart, the hourly price action over the last 6 or so trading days, the price has used both of those levels as levels of either support or resistance. And on the top side, we have the 84 level here. Here, we moved below it and started to use it as resistance, and then moved a little bit above it, forming this swing area up to the 95 level right through here. And on Friday's trade, what do? We came up to that 84 level, which also happened to correspond with the green line, which is a 200-hour moving average, and the price moved above that level. We also moved above the 95 level, and it should have opened the door for further upside momentum in that currency pair, and it did for a little bit. But then we started to rotate back to the downside. And if we look more closely at the hourly chart and look at that 84 level in particular, I'm going to put the horizontal line here against that level. You can see that the price tried to find initially support against that level, and then started to trade above and below. It became very messy through the employment number, and then we saw the price finally move below that level and then use the 84 level as resistance before moving to the downside of the last 7 or so trading hours of the day on Friday. Now, the move to the downside now takes the price in between the 200-hour moving average and the 100-hour moving average. So we're really in a neutral area not only below the 84 level, below the 200-hour moving average, but above the 100-hour moving average. Now let's go down to our lower level, the 24 level, and we can see the importance from it, not only from the daily perspective, but also from the hourly perspective. The market tried to use that level, or use that 50% retracement level as a key level to lean against. So they leaned against it here, the price moved higher, but what do? We found resistance against the 100-hour moving average, and that was a go-ahead to push lower, and lo and behold, the next time the price came down to the 24 level, it said go through it, and it did, moving down to the low of this trend line through here before bouncing back to the upside. But of importance here is these rebounds right here came right back up to the 24 level, and what do? Stay below, where sellers are trying to keep this price to the downside, and so they pushed one last time to the downside on Thursday before finally breaking to the upside, getting above the 100-hour moving average. This time, it was sort of like we tested the 24 level here and then broke. We tested the 100-hour moving average and then we broke. So the market gives those tests, those first tests, and then oftentimes it leads to further upside momentum. So in summary, I guess what I'm saying is that the 84 level on the top side and the 24 level on the downside still remain key technical levels into the new trading week. If the price is able to get below the 24 level, it opens the door further downside. If the price gets above the 84 level, it opens the level for further upside. And in between, we can add the 200-hour moving average. That's the green line in this chart, and the 100-hour moving averages, barometers as well. So sort of two bookends, two border lines, two on the top side, two on the bottom side. That is going to help define the bias for you as a trader into the new trading week. I hope you found this video helpful and helps your trading out going forward. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.